there is no greater beneficiary in the entire financial system from US dollar stablecoins than JPMorgan Chase. They are the biggest winner. Stablecoins are going to bring Eurodollar deposits back. That is going to massively increase trading in treasuries, in which JPM is a dominant participant. It is going to massively increase usage and funding advantages in the repo market for US banks, of which JPMorgan is both the largest trading party and largest participant. And it's going to give the ability of US banks to reach globally without themselves having to have a branch in every single location. And what is the largest US bank without an extensive international branch network? JPMorgan, right? And so every sign points to JPMorgan being naturally the biggest supporter of US dollar stablecoins globally, just from those perspectives, before we even get into all the markets implication of doing things like seizing equities market share back from Citadel because you've changed the market structure and can settle with them. So the fact that the guy on top is opposing them tells me good information is not getting up there on frontier topics. Hey everyone, welcome to Bits and Bits, where we explore how crypto and macro collide one basis point at a time. We're here to discuss the latest stories in the worlds of crypto and macro, but before we begin...
This episode is brought to you by Cape, America's privacy-first mobile carrier. Same premium service you'd expect from any other carrier, but designed so your number, your location, and your data actually stay yours. Get 33% off 6 months at cape.co/unchained.
All right, as always, I am your host, Austin Campbell, High Scholar of Zero Knowledge Group. I'm here with my usual co-hosts, Ahluwalia, Maester of Wealth, leader of Lumina, and Chris Perkins, the golden hand of Franklin Crypto. But today, we have with us Sam Lyman, head of research at the Bitcoin Policy Institute. And this week, we're going to be talking about one of their reports. So just to give everybody some context, we have CPI that's remained high. We have Warsh talking about inflation. The House has officially dubbed it Crypto Week last week. But what hit for us was some news specifically on data centers, AI, and some of the context around market. Now, Chris and Ram and I have been discussing AI and the market for a while on this, but today we have a new report and an author about part of what is going on. So the BPI by Sam released a report on foreign influence in US markets around data centers and AI. We'll call it the Singham ground game this time around. And there is a fully interactive national map of Singham's CCP-aligned activist network fighting the US AI build-out as it was described. So in the report, we see that the Party for Socialism and Liberation, the PSL, ran 21 campaigns across 14 states, leading to 10 local moratoria, 1 permanent ban, 4 scrapped and withdrawn projects, and it stalled out approximately $23 billion in AI data center involvement. The funding for this was almost entirely undisclosed. So there appear to be 3 converging vectors here: Chinese state media, Russia's RT, 501c3s that are funded by Singham and the PSL, and $2 billion through foreign-tied charitable vehicles, including the Oak Foundation. The hard data point is OpenAI banned a cluster of likely Chinese accounts generating anti-AI data center content for provincial-level government clients. So there has been some pushback on this. NPR saying the theory is catching on, quote, despite a lack of evidence. They claim it's real ratepayer, water, and grid concerns that predate any foreign money. And there's some dismissal by, call it labeling, from the New American. Molly White wrote an article, The Data Center Gaslighting. The believers want an FBI probe. And Sam, you have some thoughts on this. So let me start with market context. And then, Sam, I want your account of the whole thing, which is AI build-out has been one of the biggest CapEx stories out there. You know, I saw a chart that one of my friends shared that has it going even faster than Canal Mania, and that the real bottleneck here remains physical space, build out capacity in these data centers. We even have Bitcoin miners who have facilities pivoting into AI power. Trump today fused it all, saying clarity plus AI and China are all intertwined. Don't let China win on either subject. So as we're starting there, Sam, outside the OpenAI account clusters, what is the hardest evidence you're finding? What would you say goes beyond just circumstantial?
Yeah, happy to dig into that. First, Austin, Chris, and Rom, thank you for having me on. It's great to see you guys, fan of the show. Let's dig into this then. So that was one of the biggest questions after the release of our first report. In our first report, we were able to document that indisputably, China state English language media has been pushing anti-data center messaging for years at this point. They've been working hand in glove with the Singham network nonprofits in order to amplify that messaging across the United States. But that was the biggest question I got after the publication of part one of our report is, what is the material impact this is having on the ground? So we took it upon ourselves to answer that question directly. What we did was we were able to document, as you mentioned at the top of the show, Austin, 21 different case studies where the Party for Socialism and Liberation has had a very significant impact with protests in delaying or stalling data center build out across the country. So why is this important? The PSL, which is a explicitly Marxist-Leninist organization funded and essentially led by Neville Singham, based in Shanghai, has been able to block about $24 billion in data center build out here in the United States. So that's significant. And that ranges from a whole host of different projects stalled or blocked altogether. So a great example, I'm based here in Washington, D.C., right? Just 10 miles up the road, there was a data center that was going to be worth about $5 billion that has been stopped. And not only has that data center been stopped, but there's been a 2-year moratorium declared in Prince George's County where it was going to be built. And who was leading that fight? It was the Party for Socialism and Liberation, which again is Neville Singham's primary political vehicle here in the United States. And again, that's just one case study among 21 where the PSL, this Marxist-Leninist organization, was able to stop or significantly delay data center build out here in the United States. Again, it's a spectrum, but we've seen that they're having a huge impact on the ground that we've even been able to quantify in our latest report.
So I want to dig into that a little bit so that people understand the mechanics of some of these things that you're referring to. When you talk about these referendums, what is the actual functional mechanic here, right? Like, are these local government meetings and then council votes? Are we having votes that are put to the people of an entire territory here, like, say, state referendums in California? Like, what are the actual on-the-ground mechanics of blocking these things?
Great question. It's extremely local. Most of these take place in town halls, for example. And I actually saw this play out in a job that I had before I went to the Treasury Department. I worked at Riot Platforms. Some of your audience may know Riot. It's a Bitcoin mining and AI HPC company. When I was at Riot a few years ago, we were building a data center in Corsicana, Texas. Everything was going swimmingly. It seemed like the community was on board until they weren't. Out of nowhere, there was a lot of Facebook opposition to the data center that was being built. And we traced exactly where this opposition was coming from. As it turned out, it was coming from an environmental activist who didn't even live in the city. She came from the city next door. And we looked into what she was doing in her background, and we realized that she had actually partnered with Greenpeace, which at the time Greenpeace had received a huge infusion of cash from a rival cryptocurrency to Bitcoin. That the explicit purpose of this Greenpeace movement was to FUD or cast fear, uncertainty, and doubt on Bitcoin itself. And so from that experience, that's when I realized we need to follow the money. And in doing so, I was able to translate that follow the money ethos to this national project we're doing right now. But what I'm seeing take place on a national scale is exactly what I saw take place back then. What happens is you'll have a couple environmental activists or just very committed anti-data center activists online. They'll gin up the community, and then they'll hold rallies, they'll have petitions, and they'll get in some cases, hundreds of people to a town hall that typically only has, without exaggeration, maybe 4 to 5 people at any town hall hearing. All of a sudden, you have these town council members who are seeing hundreds of people come to their meetings. You're seeing lines out the door just to get in to protest against a data center project. It's unprecedented in terms of what these council members have seen. And it's a numbers game at the end of the day. The town council members see this, they interpret it as mass opposition to these data centers, and oftentimes they vote accordingly.
how many of those people are actually locals, right? Because one of the main pushbacks that you're going to get here is disambiguation of, are these people who live there and have valid concerns and their voices are just being amplified versus how much of this is just straight up astroturfing, like concerns that are not real or people from other areas?
Yeah, that's an important question. And that's a specific point that I want to be clear on. In no way is BPI intimating here that there's not an organic data center movement in opposition to data centers. We wholly recognize that there's an organic movement out there. People have authentic concerns about water usage, electricity consumption. What we have recognized, though, without a shadow of a doubt, is that there is also, in parallel to this organic movement, an inorganic movement that seems to be funded by foreign actors or people who are aligned with adversaries of the United States. And so we're looking at both. And as to your question, who protesting is actually from the specific locale where the data center is being built, it's a mixed bag. But a great example, again, is Landover, Maryland. The specific opposition to that data center project was organized by PSL here in Washington, D.C., which is close to Landover, Maryland, but it's not at all in that jurisdiction. We realized that it was the PSL chapter here in DC, again, not in Prince George's County, that was driving the petitions and a lot of the opposition to that data center. Another really good case study for this is Box Elder County, Utah. I talked to some people who were on the ground with that specific data center protest, and they told me that there were dozens of people there that they never seen in their life, and that they were able to see people being bussed in or find some kind of transportation to go to Box Elder County, Utah, which I've been there. It's the middle of nowhere. You have people coming from Salt Lake and other places to protest these data centers. And so it's a mix of both. And it's disingenuous to say it's entirely inorganic, but it's also disingenuous to say it's entirely organic because we see elements of both in play.
Chris, I'm curious what you make of all of this, given your background with national security and like how you've been, call it, structurally looking at these concerns for a long time.
I think it's clear to say that the stakes are super high. And that's really comes down to competition with other nations, particularly China. Warfare is changing overnight. The next war, I was in a manual war. We're starting to see wars become automated, which is very scary. But the fact of the matter is that is the future and that's the direction. And there's nothing that we can do to put the genie back in the bottle. And so to the extent that you have national competitors, it makes sense that they may want to slow and delay our processes. And the fact is that right now, I think the Chinese are behind when it comes to chips and compute. That's pretty much what people are in some sense, I think it may even be a benefit for the Chinese because they're forced to create these open source models. It's almost like the old Soviet computer programmers. The old Soviet computer programmers were the best in the world. Why? They didn't have computers. And so they had to be very, very efficient when they got in front of that computer to be perfect. And so I think the Chinese are having to be very efficient in building without some of that compute. Of course, to the extent that national competitors want to slow down, everything's changing, guys. Like everything is changing. Warfare is changing. Finance is changing. I think what continues to bother me is that it's very easy to feed into this natural fear of technology that many people have, this natural fear of change. And you see across crypto, across AI, like the people who should be supporting this technology the most are fighting it. And who am I talking about? I'm talking about the progressives. Like crypto on its face is the most democratizing approach to finance you could have. It gives people real-time access. And yes, there need to be client protections, but it's a very progressive technology. AI is absolutely leveling the playing field overnight when it comes to information and education. It's a huge, huge opportunity for people who have not had access, who haven't had that opportunity for on-the-job training because they didn't know somebody. So this is very progressive technology, and so it's just crazy. Like when you see some of those progressive technologies coming out with this incredible progress, some of the progressives saying, no, we don't like this because it's dangerous. I think we've got that backwards. But look, this competition is going to get worse before it gets better. And I just think it's pretty interesting that the president once again was out there tweeting about AI clarity Lindsey Graham's died. Sorry, guys, but we need clarity. We need AI, right? So I think, he gets it. I think he's right in this case. I don't think he's right about everything, but like we have to move forward. Curious, what is the data like? Obviously, the beginning of Bitcoin, people have said, "Oh, it's consuming more energy than this country or that country. Power prices are going up. It's good, it's going to kill the water." Would be curious, like, what do the numbers say? Like, has this been validated? Because also in our experience with Bitcoin mining in the past, if you're going to be a successful Bitcoin miner or a successful data center, you need to drive your energy costs as low as possible. So the market works it out. What does the data show right now? Are these concerns around pollution, electricity? What's the data showing?
Utility costs are going up. We can do an AI prompt, but utility costs are going up. I agree with you, Chris, by the way. The progressives are Luddites on this. AI is a transformational technology to improve outcomes and raise living standards. The other part is that, this is just very concerning. The threat to democracy are the institutions of democracy itself. And there's kind of a two-pronged attack here. One is in the digital spaces, like you saw with Meta. We saw this going back to Cambridge Analytica and other online spaces. Then it's the town hall. That town hall attracts a very vocal group. You don't know where they're from, and it shapes the local perception. These are major issues. There's reports of paid activism that's happening too. It's hard to get national voter ID in an election, much less trying to get some clarity on who represents the local district. So it's a major concern. AI is a transformational technology on par of nuclear energy. So of course, China's trying to do whatever they can to undercut American leadership here. China's also advancing DeepSeek, right? DeepSeek is taking greater and greater share of inference. Now, why that matters is if you want to get an intimate view, a first row seat into the thoughts of Americans, you give them AI powered by China. China's already shown a pattern of hacking that hasn't relented. And I hope they respond. They should respond by counter hacking and making public the IP of what they identify from Chinese companies that have an edge in drones and battery technology to make the world a better place.
Yeah, let me chime in. Like, in markets, if you really want to move a market, you go to a market with low liquidity, right? That's what you do. And what are we seeing? If you think of elections as a market, and I guess they are now with prediction markets, you go into the low liquid ones, right? You go into the early primaries to really shape the outcomes. And that's been a very effective tactic.
Elections are a market. We have Trump token, right? Like it's a market now, right?
It's totally a market. But you know what I mean? Like that's why, why are we getting some crazy outcomes? Because no one votes in primaries. It's a low liquid market.
Well, the interesting part here, and I guess this goes back to Sam, what you were saying about the busing, is moving people from outside the district into the district to create, call it fake opposition, right, to some of these things is the equivalent of spoofing in markets, right? That's not a real trade. As Ram was saying, the local voter is hard to identify, but they're the people who matters. So I guess, Sam, I'll ask you the question this way. How would a lot of these town halls look if they only allowed in people who actually lived in that town compared to this actually happening?
That's a really good question. I think you would still see high numbers at these data center protests and at these town halls. Definitely lower than they are now, though. What's happening is this perfect storm of left-wing activism and right-wing NIMBYism, where there's a lot of people, especially in these rural red states, that are very NIMBY. I mean, a lot of us are NIMBY, and you can't blame people for being NIMBY to some extent, especially when data centers bring with them some of the concerns that have been associated. So typically, people on the right don't get out to protest. They don't get out to town halls in large numbers. But when you have left-wing activists who are working online to get them there, then they'll show up in large numbers. And that's what we're seeing take place right now. So even if you were able to prevent the spoofing, like you're saying, Austin, I think you would still see a lot of people in these specific locales attending these data center protests, in large part because the agitation takes place online first. And any kind of agitation that takes place online, borders and boundaries don't matter. It can be somebody in the state over, it can be somebody several states over that's actually ginning people up. And that's another place where there isn't a lot of transparency. In a potential different avenue for research right now is to what extent are foreign state actors actually working on social media in order to increase a lot of the misinformation about data centers, and in order to agitate people and get people to come out to these town halls and these protests. We think there's a fair amount of that taking place, but it's a lot harder to research in an age where VPN is pretty much ubiquitous.
So for the listeners, just Austin, NIMBY is not in my backyard, in case people didn't know that. Go ahead. I was just going to ask what's the solution here, but Austin, did you have a question?
Well, I was going to say first, before we get to solutions, let's draw a parallel to one that we didn't have an effective solution for, which is what you're describing to me sounds a lot like why we got blocked on nuclear power in the United States of America, which is to say, if you're really an environmentalist and you understand durability for climate change plus preservation of the environment, you are pro-nuclear power. That is basically the punchline. It is much cleaner than the other forms. Modern nuclear reactors are very safe. Ironically, most of the problems we've had, things like Fukushima, are because we couldn't build the new stuff and continued operating the old stuff that doesn't work the way it should. Because let me tell you right now, we've made a lot of technological advancements from the 1950s to the present. And so on nuclear power in the United States, we really lost the plot. I think only recently have we started to figure out, actually, wait a minute, we should be building a hell of a lot more of this stuff. And like, I live in New York City. It was clearly an own goal to shut down Indian Point. If you look at what's happening with the power grid in the United States, and all of the people who advocated for that on environmental grounds shot themselves in the foot and then reloaded and continued firing. So I would ask you, what is the potential solution here to avoid the mistakes that we made around nuclear power?
Yeah, Austin, that's the perfect parallel. They say that we solved climate change about 80 years ago, and then we banned that solution. And that was nuclear power. I think nuclear power is an ideal analogy for what we're facing right now, because AI has the potential to spread so many benefits across society in a way that progressives should support. I think the difficulty here, in large part, comes from the messaging from AI executives themselves. On one hand, you hear that we need to build AI infrastructure and data centers to beat China. And then on the other hand, you have the same executives saying that this same artificial intelligence is going to eliminate up to 50% of white-collar jobs in the next 5 years. Who's going to support that? I feel like in large part, a lot of the opposition to data centers not only comes from foreign influence, but the call at a certain point is coming from inside the house. You have AI executives who are doing more to spread fear about the technology than they're building than the foreign actors are themselves. And that's something that has to stop immediately. I think those AI executives for years have been messaging to Wall Street about their technology being the end all be all. And they've done so at the expense of messaging to Main Street about how this technology will actually materially benefit them in their lives. And there's many ways that we can lay that out right now. For example, we're seeing a blue collar boom with the AI build out as we speak. You have about 500,000 temporary construction jobs that can be directly linked to the AI build out. In addition to that, you have tens of thousands of permanent data center jobs that will be associated with these data centers being built across the country. And you have a huge struggle or a huge race to find electricians. There's electricians who have jumped jobs 3 times over the last 18 months because rates are so high for good electricians right now, getting these data centers online. People look at only one layer of the AI stack, which is the interface with ChatGPT and with Claude, without looking at the whole stack and all the jobs associated with it. And beyond that, we need to help the American people understand that in an economy where knowledge becomes to a certain extent democratized and automated, what carries a premium? It's the human being themselves. That need to always have a human being in the loop will only increase as AI becomes more integrated into our economy. So what we're looking at, as with every other technological trend before this one, are jobs that are different than the jobs of today, but materially better and easier and more human than the jobs of yesterday. I think we saw that with industrialization in the 1800s to the present day. People working a desk job have much easier, better lives than people plowing the fields, for example. And I think you're about to see that with AI. It's going to automate a lot of the drudgery that we usually associate with office work to make the work nature itself a lot more human, a lot more interpersonal in nature.
I would add that you need political leadership also. People follow their leaders. Leaders are influential, and across both sides of the aisle, you have opposition to AI, whether that's Ron DeSantis or Governor Newsom. So you need political leadership. And AI, to your point, is driving blue collar work and better wages. And in the future, it's going to enable, say, a CPA to get 10 times the work or volume done through AI agents. So it's going to benefit American productivity and earnings tremendously. You do need political leadership to get behind this. Trump actually spends more time talking about crypto than AI. I think he needs to dial up more focus on AI.
Let's talk briefly about the other thing Trump has been focused on, because Sam has to leave at the half hour. Sam, clarity. Is it going to pass?
That has been the question for so many months now, right? My response is I think now or never is the reality of our situation, but I would put the probability of clarity passing in the next few weeks at about 70%. And that's not just wish casting. That's what I'm looking at when I go to these meetings on the Hill and I see the drive and the energy behind this bill. It's all there. Conveniently, we're starting to see a lot of support from holdouts on the left. In particular, there was some concern about BRCA, the Blockchain Regulatory Certainty Act, which was a critical component of the Clarity Act in allowing Bitcoin developers to be able to continue to do their jobs. There was some resistance from Democrats on that specific aspect of the bill, but just recently we saw that Senator Wyden, who's been a leader on a lot of technological issues being legislated over the past couple decades, he actually came out and said that the Clarity Act needs to include BRCA. So that's a huge win. I also think with the passing of the late Senator Lindsey Graham, you're going to see even more momentum for this to happen. Senator Graham was a big advocate for getting this thing across the finish line. We saw Patrick Witt, who is the head of digital asset policy at the White House. He talked this morning, made a post on X that it's time. It's time to pass this bill. Clearly, President Trump is very much behind it too. I think they recognize that clarity passing is critical to maintaining our technological edge as a country, in addition to leading on AI. So I think the pieces are coming together. Of course, this is Congress. They say that nothing moves members of Congress more than jet fumes, meaning the call of August recess is looming in the next few weeks. And if anything is going to motivate members to get this thing across the finish line, I think it's that need to get back to their districts, to get home and to start campaigning. And so I do think that we'll get it across the finish line in the next few weeks here, but the probability at about 70% right now.
All right. So I'm going to ask you one question before we have to let you go, and then Chris and Ram and I can continue to debate this one, which is, if you're at 70 now, you're basically telling me, if I'm hearing this right, we're going to pass it by the time we get too far into August, because otherwise we go into recess, right? You're not an optimist that we can get this done while everybody is campaigning?
I'm not. The legislative window is tightening, and that, which again is one of the reasons why I think the odds for passing it now are greater. What I've seen with a lot of legislation in the past is as you get closer and closer to that drop deadline, people will move. Deals will be made at the last minute. You see this frequently with omnibus deals, for example. And so because of that, I think the odds are greater that'll happen in the next few weeks. Now, if we don't get it across the finish line in the next few weeks, the ability to pass this bill this year is much smaller. I think it probably decreases that point, probably down to 35 to 40%.
Okay. Checks out with me. Deadlines create action. The question is, are we going to drive this car or just put it in park and walk away and campaign? So before we argue about this further, Sam, I know you've got to go, so I want to take a moment to say thank you for coming on. Appreciate the discussion today. Whether you believe it or not, you should 100% read the BPI report so that you're informed on the topic and have a good think about what's going on there in light of some of the other things going on. With that, for now, we're going to take a quick commercial break, and then Ram and myself and Chris will be back to argue more about clarity and a few other things.
If you hold crypto on your phone, your biggest vulnerability isn't your wallet, it's your carrier. AT&T, Verizon, and T-Mobile have been breached again and again, and SIM swaps are still one of the easiest ways for attackers to drain accounts. That's where Cape comes in, America's privacy-first mobile carrier. Same premium service, but Cape rotates the identifier on your SIM every 24 hours, deletes your call and text metadata after a day, and protects against SIM swaps with a 24-word recovery phrase that only you control. You also get 2 middle-to-end encrypted secondary numbers for banking and signups, so you stop handing your real number to every app that asks. Go to cape.co/unchained and use code UNCHAINED for 33% off your first 6 months.
All right, everybody. Welcome back. Chris, I want to throw the football over to you on this one because something very interesting around clarity did happen that Sam was alluding to, which is Senator Ron Wyden, senator from Oregon, Democrat, who was around in some of the original arguments about encryption and structure of the internet, came out and said the BRCA is essential and we need to get that passed. That, I'm going to be honest, was not a signal that I was expecting from the Democratic side of the House. And it tells me that this debate is starting to transcend the fistfight that we've been having between banks and crypto companies, because Wyden's point was, quite frankly, orthogonal to any of their concerns. So I want to flip this over to you. He's been involved much more in the national security angle of these discussions in the past and the privacy and human rights angle. What do you make of those people starting to pile in and have a louder voice around the clarity debate right now?
I was on with a bank today, and they were like, damn it, I need the Clarity Act. I met a bank last week, and they said, I need the Clarity Act. Guess what, guys? The banks need the Clarity Act. And I'm like, why aren't you out there like marketing this? Let's go do some joint marketing. I want the Clarity Act as well. So I think you're starting to see a lot of folks are starting to really think and be like, wait a second, stuff's here anyway. You know, we're getting clarity from these regulators. The Clarity Act would really help me deploy resources. And most of all, it gives you federal preemption, right? As these banks are starting to think about their businesses, they don't want to go to every state and figure out how to operate. It's very complex. One of them was asking me today, hey, Chris, where do your traders sit? And I'm like, really? That's really what you need to know? And so they're starting to realize the benefits of getting that federal preemption through Clarity. What we're looking for is as follows. We're looking for a vote. And if we can get to a point where we have a vote, then people have to go on the record. And I think if you come out against Clarity, you better have a real good reason. And yes, they'll say, oh, ethics this and ethics that. Everybody knows that ethics needs to be addressed across all asset classes. And so I don't think that's fair. I think the country is much better off. And, you know, God help you. If you vote against it, then history will look poorly on you. And maybe so will some of the, fair shake and others that you're going into midterms. So I think it's a very bullish time. Now, we all know as you get towards the end, things get really weird. People come out of the woodwork in support that you don't expect. And people who you think support are going to come out and say, I'm against it because they have something else that they want politically. So things get weird towards the end. My question for you guys is, I've always been, I think for the last 3 or 4 months, I've kind of pushed into the 51%. I think it gets done. You guys have been on the other side of that. Are you with me or are you against me?
So I'll say I remain less than 50%, but I hope we get it done. What gives me heartburn, Chris, is exactly what you were saying about how a vote is going to play out at the end, which is if you put this on the floor and you expose it to the amendment process, which I think you're going to need to do to get to a vote in the Senate, I think the contentious part ultimately does come down to the ethics thing. I was higher, and then the Trump crypto disclosures pushed me lower again. I think it creates a very hard setup to get any Democratic votes if you're not going to include some sort of pretty strong ethics language along with the bill. And I think the problem of the voting history will be if the Republicans vote down the ethics amendment and the Democrats were a monolithic yes, and then you vote on the bill and it's Republicans yes and no Democrats. I think that makes it very hard for somebody like Fairshake to go pick a fight in the midterm elections, because you're essentially saying we think corruption should be legal as a political stance. Like, The message is much more contentious than you would think if the Democrats were yes on every single other part, and that's the hill everybody dies on. So to me, the question ultimately of does this move is two things, which is one, just can we get it done timing wise with Iran kicking up and everything else going on? And by the way, 2 senators just knocked out right now because Lindsey Graham died of a heart attack and Mitch McConnell is still incapacitated and not available for voting. And I will remind everybody, the average age of a U.S. senator is approximately 113, which is why this keeps happening. Like, do we have the bodies literally to get this vote done is question number one. But then question number two is, does something break in the interim? The Senate calendar is very tight right now. Like, we do need to get this to a floor with the right language to get to a vote. The thing I think people have also gotten really broken on, Chris, as you were alluding to earlier, is the financial interests. Most of the banks in America deeply benefit from the Clarity Act, just as they will figure out over time they are the beneficiaries of the Genius Act, right? Like, more money coming back out of the Eurodollar market to onshore to fund U.S. banking operations is a net good. More trading activity moving from offshore to onshore to fund the U.S. economy is a net good. The banks genuinely don't know what they're talking about here. And I've talked with senior leadership at many of them, and I consistently, without naming names, get told things that are factually false about how these markets work. They are not informed participants. So I worry the two-part of, are we going to shoot ourselves in the foot out of ignorance, and do we just have enough time before we even get to ethics? And maybe none of those individually is a more than 50%, but when you do the combined probability, I end up at less than 50% that it passes.
Yeah, I'm with Austin on the less than 50%. I had a lunch with one of these crypto super lawyers that goes to DC and advises these policy think tanks. And he said, hey, Ram, it's not in the interests of policymakers and politicians to get this done, especially if you were appointed by Fairshake. They need to extract the rents for the next election. You need to maintain a state of war. You need to keep climbing up the hill. You need to keep ginning up anger and focus and motivation to shake Silicon Valley and the lobby to write big checks to these politicians. That's how Washington, D.C. works. They don't have an incentive to get this passed. Who got them elected in the last cycle? And their rankings are even lower now. They want points for looking as if they want to get it passed. Then at the end, they'll say, nope, sorry, we couldn't get there. We need your help. I'm going to text you 1,000 times till you make a contribution.
I'm going to suggest something to the Fairshake pro-crypto and pro-modernization folks that I have not seen enough people realize if you're actually trying to get things done, as opposed to playing into the exact dynamic that Ram was just talking about, which is this. The number one predictor of whether a politician supports crypto and Clarity or not is age. There are very pro-crypto Democrats who actually have a superior understanding of this issue to the median Republican. And if you don't believe me, go talk to Richie Torres and his staff, right? Like, the dividing line is actually age. If you really want this legislation to move in the medium term or the long term, here is the tactic that will work. Primary anybody who is over the age of 65, right? Your preference function for politicians should be people who grew up when the internet was becoming a thing, not people who are still skeptical of PayPal, even though it's 2026. The dividing line is age. If you want this to move, get rid of the super old people.
Where do you stand on that, Austin? Or which side of the fence are you on? I'm just kidding. There's some old people that are good too.
But if you took as a heuristic, get rid of everybody over the age of 65, it would pass.
You're spot on. 100%.
Right. Look at all the constructive Democrats, right? Like Senator Gillibrand, right, has been one. She gets what's going on. Ossoff in Georgia, Gallego, Cortez Mastro, right? Like, as you look at all of this, it's really the Elizabeth Warren camp that was never really comfortable with electronic commerce and kind of secretly wishes everything would go back to paper tickets that are the ones who are the problems here, right? Like, the American banking system was mythologically perfect at some point in the past, and we should preserve it in amber and always remain there.
Yeah. Remember in the internet era, there was a lot of fear on putting your credit card online to purchase a good or service. Now we take that for granted, and you're seeing the same Luddite reaction across modern technology.
We definitely are. And speaking of like a segment of people that remain, for lack of a better way to put it, somewhat Luddites, like Ram, you were talking in our chat earlier about bank earnings, right? And so let's talk about what's going on there and what's coming.
Austin's the master of the transition. I don't know how he does it.
I just
that was beautiful. That was like the pass that should have been made to Harland on Saturday. Did you guys see that? I'm not even Norwegian, but I felt that in my gut. Like, how did that happen? So yeah, look, bank earnings are coming up starting tomorrow. We're gonna have a lot of major mega center banks reporting. Banks are the single best way to read the economy. Forget about the non-farm payroll, forget about the ISM, forget about the government published data. Is now being generated by essentially political appointees. It gives you a real-time view in the economy. I expect what it'll say is what it said last quarter and the quarter before that and a year ago and 2 years before that, which is that the consumer is strong. The consumer continues to spend year over year. Account balances are up. Consumer wealth is up. Credit delinquencies are low. And I think that's what we're going to see. Now, bank stocks already rallied into this over the last 3 weeks in anticipation, which also happens fairly consistent quarter to quarter. But we're going to get a live real-time pulse on the economy. From everything I'm seeing, it's no longer a K-shaped economy. The top half, the bottom half, they're both doing well. We might see an AI-shaped economy come soon, where it's either you're on the side of AI or you're not on the side of AI.
Yeah, but right now everyone's on the side of AI because of all the blue collar work that's being created.
Yeah, like for example, like I had an Uber driver this weekend, and I said, driverless cars are going to disintermediate this technology. He wasn't really appreciating that. We had a debate. I said, but this is going to happen. Like, pick your year. Is it 2 years or 3 years or 4 years? I had another chat with another individual who has an explosive business providing AI tooling for small businesses that want to be AI relevant. Imagine having a new web page that's chatbot enabled, for example, or AI agents that are capturing notes from calls and providing insights to the sales force. So I do think banks are unusually strong beneficiaries of AI technology. You're going to see that through lower cost of servicing, better underwriting. Imagine you're a life insurance company. Your patients are also going to live longer through better healthcare options and better technology, biotechnology. So it's, I think, an unusually beneficial story for financials. Financials are an AI beneficiary.
Well, I agree
that. No, I was going to say, I agree. The consumer is strong. We'll have a number of different interesting data that hits the markets this week. But there's one area I think the market's wrong, and I've thought this for a while. Markets are predicting a potential rate hike this year, and I just don't see how it happens. I would love to get your perspective. I think it's going to be very challenging for Kevin Warsh to come in and raise rates. And now look, I think we have some temporary challenges. Oil, WTI, and Brent spiked today because of the renewed Iran hostilities. I do think we're going to settle into a new normal over time. And bombs away every few weeks is just going to be the reality of the situation for a while. It will reach a stasis, but we haven't seen oil hit 200 like people were suggesting. Yes, the consumer is strong, but politically, I just don't see. I just don't see a scenario where he's able to hike rates. Maybe I'm wrong.
Yeah, I agree. In the beginning, Warsh has got to come out hawkish to establish his credibility.
Yeah, right. For sure.
That's what he's doing now. And he needs to see what we're seeing now, which is that the market is expecting rate hikes. That means he's doing his job in establishing credibility. Agreed. Then we get to let some time pass, see the price of oil drop, see inflation measures improve, and then they're not going to cut. He got the message from Trump, and this is a well-discussed topic.
Yeah, so I think he's doing exactly what you'd expect. Speak hawkishly, carry a big stick, and I think that's very constructive to for markets.
So to backfill with a little data here, right, as we're looking at banks and what it's saying about the markets, and then we'll leg into inflation and the rates curve. Currently, consensus on the street for earnings per share year over year, BOFA is plus 27%, Citi is plus almost 39%, Wells Fargo is plus 12%, JPM is plus 11%. I think all of that is very interesting if you thought this was a K-shaped economy, because those are broad consumer-based banks.
Yeah.
Another one, by the way, is you're looking at bank stocks to keep an eye on if you're really monitoring the consumer, is going to be Capital One, given the mix of their business. So keep an eye on their results as well.
Well said. I mean, all over the world, banks are doing well, by the way. In the Eurozone, Barclays, HSBC, Santander in Spain, UBS in Switzerland. In Brazil, the banks are doing well. In South Korea, in Japan. So we have a global economic boom. This is characteristic of late stage. It doesn't mean that party's going over, but this is what late stage looks like. So this is like, you should be fully invested, enjoying the earnings growth, but keep an eye on inflation.
Another thing that I would say is, I think, back to your point on inflation, long rates have been somewhat sticky. Like, they were going up, they've come back down, right? But nobody's getting them back to 3 right now. Those are the thing that remains elevated. And what that tells me, like, as a former rates trader, is I think the market is reading the rates hike probabilities wrong, right? Because everybody looks at the front end rates and assumes, oh, that's a linear sort of like interpolation to one cut. And I don't think that's what it's telling you. You've got to look at the vol surface as well. I think what the market is telling us is we mostly think the prediction is flat, with a very small but non-zero probability that something really fucking breaks, right? And that's how you get one rate hike of 25 bips predicted. Is what it's really telling you is we think there is a small but non-zero probability that something like Iran really causes a huge problem, and you have a huge whiplash in rates, because, like, not just the Strait of Hormuz, but like they really throw hands, and like now all of Saudi Arabia's capacity is offline, right? And so that is a vol thing, right? And people look at the rates curve and price it as linear. But if I told you, take Apple, let's say we found out there was some sort of critical blocker for the production of all iPhones and Macs and Apple services, with a 1% chance that it happens. That's not me predicting a 1% decline in Apple sales. That's me predicting a 1% chance of a wipeout. Those are two very different things. So, Chris, when I look at the rates curve, I think what's being priced in there right now is not that people think with strong like conviction that there's one hike or maybe 2 hikes coming. I think it's them predicting the tail risk of how unstable the geopolitical situation is. Does that make sense to you as to how I'm reading that?
I think that's a read. I don't know if it's the right read. Again, I think the market's probably got this one wrong, which makes me pretty excited if you look at frontier assets. Hard not to be. But look, you never know. Iran there's a lot of uncertainty there. I personally feel like things are settling. Like I said, once the market understands and digests it, pipelines rewire, U.S. starts pumping, get Venezuela online, the market will find a balance, and we just haven't seen some of those fear-mongering predictions come to pass.
I mean, I would say I think you're definitely correct that the market is having a hard time digesting information. This year, I've seen senior leaders from some of these large institutions saying things that are almost with certainty factually false more often than I have in the past. And it tells me that good information is not always getting up there. Like, to go back to clarity, a great example of this has been Jamie Dimon constantly hammering on stablecoins, because with all due respect to Jamie, as somebody who's a longtime JPMer myself, you've got this one totally wrong on stablecoins. I will say it this way. There is no greater beneficiary in the entire financial system from US dollar stablecoins than JPMorgan Chase. They are the biggest winner. Stablecoins are going to bring Eurodollar deposits back. That is going to massively increase trading in treasuries, in which JPM is a dominant participant. It is going to massively increase usage and funding advantages in the repo market for US banks, of which JPMorgan is both the largest trading party and largest participant. And it's going to give the ability of US banks to reach globally without themselves having to have a branch in every single location. And what is the largest US bank without an extensive international branch network? JPMorgan, right? And so every sign points to JPMorgan being naturally the biggest supporter of US dollar stablecoins globally, just from those perspectives, before we even get into all the markets implication of doing things like seizing equities market share back from Citadel, because you've changed the market structure and can settle with them. So the fact that the guy on top is opposing them tells me good information is not getting up there on frontier topics.
Yeah, that said, I hear you, but we still have a problem with utility on stablecoins. We can move them around really quickly, but no one wants to hold them. And in fact, they're designed so that you don't hold them. That's the whole idea of suppressing interest. And so I guess my question to you, Austin, based on what you just stated, was how do we overcome that? When does the utility arrive? When can you go and buy a cup of coffee with a stable coin without having to throw a credit card in the middle of it and charge that vendor 3%? Like, that's the missing link. We haven't seen that utility manifest itself, that last mile utility. And I just don't get it. Like, I do get tokenized money market funds. Look where I sit. I totally understand that. I understand the yield to the holder. But again, who's going to be comfortable using an asset when the interest goes to Jeremy or Brian or maybe Jamie someday? They want it themselves. So it's like, how do we solve that that end mile issue?
So I think let's disambiguate the problem of interest from the last mile issue, because the last mile issue fundamentally is an atoms and technology issue around how do merchants accept payments, right? If you go to your average grocery store, if you go to like an electronics retailer, if you go to buy a basketball, they don't really want to think particularly hard about the internal guts and depths of financial technology. They just want stuff to work. And consumers kind of have that same problem from the other perspective. Like, I don't want to have to go somewhere, right? Like walk down the street, to buy a coffee and have to think deeply about optimization around payments, markets. I just want to tap my phone and walk away with it.
Right. You just want to tap.
So that is a choke point problem of where the distribution occurs from the physical device providers and the payment service providers, right? That's Visa, that's MasterCard, that's Square. And the question there is one of economics and distribution in the United States. But I'm saying that's one particular vertical. Nobody involved in that cares a lot about the interest, to be totally honest, on those balances with those kinds of transactions. The other side of that is very different. Ram, you want to hop in?
Two thoughts. Yeah, something I've been passionate about. This is a real opportunity to improve outcomes for merchants and consumers, right? Interchange income, which funds our rewards points, is a tax on the consumer. We get it in the form of rewards points, but we're getting less back than we ultimately pay out. This is one of those incredible opportunities for digital assets that VCs and founders have not focused on. So there are two ways to look at this. Back in the day, some of you may remember, I know Austin, you definitely know this. Chris, you know this. We had this concept called coupons. Remember coupons? Coupons, they're merchant offers, merchant provided discounts. That's what you need to see, as opposed to card issuer provided rewards benefits. Do we see this today? Well, you do see it in buy now, pay later. And there's a way for this to happen because the gross margin for a retailer is about 30 to 50%. Their net margins are about 1%. They barely eke out year over year. We're talking about like a Macy's or a corner bodega, deli. The gross margins are high because they have high margin on their inventory. It's just that after all their fixed costs, wages and locking up inventory, etc., they barely make any money. Now that interchange, that credit card swipe fee is like 2 to 3 points. If they could get that back, they could double, triple their earnings because that low net margin gets a solid boost from better payments. So merchant offers, the coupons are a way to do this. There's art in the market of this happening. There have been some credit card firms that have tried to offer coupons and rewards in the statements. Consumers need to shift their behavior for this to happen. It's a great opportunity. This is the kind of thing that would benefit Main Street America. Like Besson should be thinking about this stuff. Like Amex is part of an oligopoly along with Visa and MasterCard. They legitimately are an oligopoly. There's antitrust that goes after them every 10 years, and it gets beaten back because they have deep political connections to Washington, D.C. The other gap on this unlock is access to credit and control of the merchant. So I was in Walmart for July 4th trying to get some fireworks for the bicentennial. I tried to use Apple Pay. They said, no, we do not accept Apple Pay. Why? Because Walmart forces payment on their own platform. They don't want to share the economics with Apple. Walmart has that control. Other small merchants don't have that kind of control. And credit is the other aspect. The reason why it works in buy now, pay later is the merchant can say, look, I'm going to give you credit because my margin can finance the credit. I got 50% margin. I want to sell this refrigerator for $3,000. I'll even take on some credit risk because if I lose 10 points on credit, I have enough margin to make it up for that. So these are the issues around this. There's an amazing startup to be built addressing this problem or consortium that gets after this problem. I haven't really seen traction against it, unfortunately.
Well, I would suggest there are some places that get traction. And the interesting part of it is sometimes it comes from the consumer side of things. Like if you look at, what Rakuten is doing, for instance, which is unionizing consumers to get cash back out of merchants. I do think there are some unlocks here, but Ron, back to your point of like why the market structure is this way. We also have some regulatory hooks around card acceptance in the United States that is to some extent government enforced. So all of these technologies are entering a very delicate equilibrium where we've spent like 20 years stacking plates in very particular ways, and moving any one part of it can cause large parts of this hill to tumble down is the other part of why I think it's so sticky. But Chris, that goes back to your point on the interest too, right? Like banks are fighting this interest part because they see themselves potentially losing balances that they pay zero on, while ignoring the flank of everybody sort of weaponizing government money market funds against them in different ways, like Fidelity's cash management project. For those of you who don't know this, you could go to Fidelity and open a cash management account where you're going to get a debit card, banking details, and they hold all your money in the Fidelity government money market fund. That is a superior product to most banking things out there. And over time, that will just grind away and grind away and grind away to make that thing work. All of it comes down to banks got kind of fat and happy in the zero rates environment, don't want to raise deposit rates. But if you go back to the 90s, banks were not mostly paying people zero.
That's right.
All right. So, Chris, I'm going to bring this all the way back around to you because now you're at Franklin. Franklin Templeton has an interest-bearing tokenized government money market fund, right? If you are somebody in the United States right now, what can you use that for? How can you get your hands on it? And what would you want to do with that to make this problem better?
Yeah, I have to be careful about how I talk about our various, strategies. But we have an incredible technology. It's called Benji technology. What does it do? It unlocks the power of crypto that allows these types of products to pay intraday, to exchange amongst users 24/7. It unlocks what we've talked about many times in this show, the benefits of crypto. And again, 24/7, globally accessible in many cases, depending if you're KYC'd or not. Intraday programmable yield to the minute. Very cool stuff. So yeah, I think we're one of many that have strategies and technology platforms that allow us to deliver this kind of stuff. You're going to see more of it. Well, like, what do we talk about in this show all the time? What does it come down to, guys? It comes down to yield, and sometimes it comes down to leverage. That's what, like, you think about those two things, you design products with those two things, and that's what the consumer wants over and over again. This obviously doesn't have, many of these technologies don't have leverage, but those are the big themes that we continue to see in crypto and finance.
All right. So on that note, next week we'll probably have a much better idea if Clarity is going to be moving or not. So keep your eye on that ball. But until then, thank you for joining us for this episode of Bits and Bips. We will be back in 1 week to discuss more about how the worlds of crypto, macro, and probably Washington, D.C. are colliding. So until then, everyone, thank you. Thank you for watching and hope you enjoyed this episode of Bits and Bips. Just remember, nothing we say here is investment advice, and please check unchainedcrypto.com/bitsandbips for more disclosures.